Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss what action Trump has taken last week, what are its implications on different asset classes, and what is the outlook for rupee for coming days. One of the first reform announcement what Trump announced was energy reforms. In the energy reforms, basically Trump wants to increase the output of oil from the US economy. Basis for that, he has taken some impact. Apart from that, there are news that Putin has also listened to Trump's advice and wanted to end Russia-Ukraine war. Based on these two news, what we have seen that oil prices have corrected by almost 6 to 7% in last 1 week, and we are expecting that in future also we may see oil price moving towards $68 to $70 per barrel. If oil prices are on a downward trajectory, it is positive for all emerging market economies which are dependent on importing crude. Second important aspect which the entire market wanted to listen was what is Trump's outlook on tariffs. He is imposing tariffs on two major countries like Mexico and Canada affecting from 1st of Feb close to 25% on most of the goods which are getting imported from Mexico and Canada. He was silent on China. Third, he says that he is trying to work something with China. Third, he was silent on universal tariff also, which he was supposed to impose on all the goods which are getting imported into the US economy. So basically, that was a positive news for equity across the globe, and dollar, which was getting strengthened from 100 to 110, we have seen an initial sign of cooling off with dollar index also. Third important aspect, what Trump had announced last week was that he is giving instruction to the central bank of US Fed that they should go ahead and reduce the interest cost. Trump did not stop there. He suggested the entire world should go ahead and cut interest rate. Now, why Trump wants to go and cut interest rate in the US? There are two important reasons. First, by nature or by policy, we can say that Trump promotes businesses. Second aspect, Trump understand that today the US economy is spending close to 5% of the GDP in servicing the debt what they had taken. Now, in order to reduce the fiscal deficit, the only way at the current uh, point of time is to go ahead and reduce the interest rate. Now, what impact it is going to have on DXY? Basically, if the Fed is cutting interest rate aggressively, it is going to have a negative impact on dollar index. Entire market is expecting that in the coming week, Fed is not going to cut interest rate, and they are only going to cut interest rate twice in the current year. If any statement which suggests that they are going to cut interest rate more than two times in 2025, it will be a negative for dollar index. Now let us see what the technical chart of dollar index is suggesting. If you see the chart, dollar index chart has formed a head and shoulder kind of a pattern, which is technically a reversal pattern, and it had given a break down below 107.50, which was acting as a strong support. Now, based on the technical chart, we can suggest that 107.50 to 108 is going to act as a very strong resistance for dollar index, and there is a 85 to 90% probability that dollar index can move towards 105.50 to 106 kind of levels in coming days. Now let us discuss outlook on rupee. In life and market, nothing remains undervalued or overvalued for a longer period of time. That holds true for volatility of rupee also, which has started moving in both the direction. But now the question remains whether it is going to move back towards 86.80 or it is going to move back towards 85, 80. Now let us understand few factors which will help us to make the view. On the positive side, dollar index and 10-year treasury yield both had given a sell signal on their charts, and both are showing pressure, and both are indicating that they are going to further move down. If dollar index move towards 105.50 or 106 kind of level, it will be positive for all emerging market currencies. Second positive for all emerging market currencies or India is falling crude oil prices. Trump had indicated that he wants to uh, put pressure on oil prices, and technically also it seems that crude oil prices can move further lower by 5 to 7%. If this happens, that is also positive for rupee. Now, what are the challenges for rupee? One of the main and important challenge which rupee might face in the coming days is FII have been selling from last 3 months on a continuous basis. If budget will not give them any excitement, then they can continue to sell in coming days also. If they continue to sell, it can create a negative impact on dollar rupee pair. Second challenge what rupee can might face is RBI might start building reserves again. Saktikanta Das had a policy that whenever the inflow is coming, he will not allow rupee to appreciate, neither he will allow rupee to depreciate. Basically, he wanted to keep rupee in a range. So he was buying reserves at all the time and selling when their outflows were there. If his successor also follows in the same direction, then appreciation in the rupee might be limited. Now let us conclude what is the view for rupee. One thing is very sure, picture अभी बाकी है. Volatility has just picked up from a multi-year low. We think that volatility will be high and volatility will be on the both the side. Market was expecting that rupee might go towards 87 or 88 kind of a level on an immediate basis, but currently we are seeing on the charts that 87 to 88 levels look difficult on an immediate basis. In fact, we believe that 86.40 to 86.60 is going to act as a very strong resistance for dollar rupee pair, and in case if rupee breaks the key support level of 86.20, then there is a probability of 85 to 95% that it can move towards 85 80 kind of level in coming days. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporter. Scenario 1. If the pair breaks 86.20 on Monday morning, just go and simply cover 100%. Second scenario, if the pair takes supports and bounce back towards 86.30 to 86.40, at that point of time, you should go and cover 100%. Simply the message is be 100% cover on your existing exposure. Now let us discuss strategy for thick margin exporters. For thick margin exporters, we have been suggesting them that they should wait with a stop loss. From 84.20 to 86.50 kind of a journey was just by revising the stop loss. But we think that the time has come. If 86.20 is getting broken, then thick margin exporters should go ahead and increase their hedge ratio by at least 5 to 10%. Ideal hedge ratio for any thick margin exporter, if they are covering on an anticipation basis, should be between 40 to 45%. Now let us discuss strategy for importers. In the NDF market, rupee has closed near 86.20 kind of levels. If on Monday morning the pair breaks 86.20 kind of level decisively, then there is a possibility that the pair can move towards 85.80 to 85.90. Then you should go ahead and cover your imports near 85.80 to 85.90 kind of level. Now, how much imports we need to cover at this point of time? For this week, we are suggesting that importers should not go ahead and cover for a longer term period. They should only focus on covering short term imports between 15 to 30 days. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.